Hey guys, welcome back to another Sunday video where we prep for the week ahead, talking everything from indices, gold, to currencies, and maybe even a little bonds and yields and stuff this week. We got a lot to talk about as this week is going to be a good one. In terms of action, there's more stuff coming here as we count down the days to the U.S. elections, which are likely to cause and continue to cause volatility in the markets. So let's go ahead and jump right in. You've got the first one I wanted to just briefly touch on is this position. This is currently my biggest position. It is SMH, which is an ETF that tracks semiconductors. Think of it kind of like, the NASDAQ has all sorts of different stocks in it. Well, semiconductors, which are like your NVIDIAs and your AMDs, Qualcomms, Microns, all these companies that make chips for technology. It's a part of the market that I really like. It's a high risk, high reward part of the market. And so far we had a nice little pop off of this support level. I just wanted to mention this trade because it is one that I will be personally watching very closely going into the week. Now, what you'll notice is that semiconductors don't always, but kind of follow the NASDAQ. In fact, semiconductors have had a recently tough couple months, and that's why the NASDAQ is not looking quite as strong as the S&P 500, which of course, if we take a look at the underlying, and this is something I really, really can't emphasize enough. If you are an index trader, if you trade SPX or you trade NAS or US 30 or whatever, one thing I would highly encourage you to do is get familiar with what are called sectors. These are the underlying things that make up the indices. These are like, technology, for example, energy, consumer discretionary, and semiconductors make up a good chunk of the NASDAQ as well. Just wanted to point that out as a tip for the index traders in the room. Let's start with the S&P 500 just for a moment. And feel free, by the way, if you're not as interested in one particular market, I know these videos can be a bit long. I will generally go in the order of what you see on my watch list here. So usually the videos separated by indices, then commodities or gold, and then we get into bonds and currencies. So let's go ahead and talk S&P for a second. So market continues to be in a very strong uptrend. Let's take it to the daily chart. What we can see here is that there is just support for every dip. It seems like, you had these big dips in August and then September. Buyers came in very, very strong. Doesn't seem to want to quit for now. And I would imagine that if you do see a pullback, there will still be buyers waiting around these key levels of support. Now, we may not even get back to that level of support for a while. It's possible that there could be support that gets found right around here, around that 57.50 level, and buyers continue to push this thing up and away. When you're in a bull market, it's very difficult to call the top, and personally, I have a lot of confluence factors that are telling me to stay long indices. What we can see on the S&P 500 here, for the Edgefinder score, we're getting a plus 10 score. Now, if you're unfamiliar with the Edgefinder, let's keep it really simple. Basically, the score column is just the sum up of the entire row for that particular asset. So when we're talking about the S&P 500 score, we're looking at, after looking at the commitment of traders data, which should be interesting this week, retail positioning, seasonality, trend, GDP, PMI numbers, retail sales, inflation, like CPI numbers, and then NFP jobs numbers, things like that. The overall score, without getting into the nitty gritty here, is a plus 10. So I'm getting some extra confirmations, and it has been giving us confirmations for the S&P 500 for a few weeks now. So we've got some nice bullish signals on the indices, which tell me to stay long until something changes, right? Price action has been pretty favorable to the bulls. So when we flip over to the NASDAQ, same thing here. I think we're very likely to go test those highs, 20,700 on the NAS 100. So, I do think that those are very, very appropriate things to go back and retest. We've had this big kind of downward sideways market here for a little bit of time since going back from July, the highs there in the NASDAQ. So I am expecting that we do see those highs get retested. Now, if something changes, meaning we get price action failing out, such as, let's say we start breaking these lows and start reversing, then you may have a different story. But trying to call when that's going to be has been a very dangerous game for, index traders and gold traders this year for that matter. So when we look at the indices, when they're supported price action wise in, very strong overall upward trends, and you get confirmation from the Edgefinder, there is no reason for me to get short. The only answer for me is to look for pullbacks, be patient if I'm not in them, and stay long. Now, I mentioned for my personal positioning, I am already sort of long indices, by proxy through the ETF that I'm trading, SMH. We can take a look at my full positions right now here on my Webull account, which I'm logged into. There's a link down below in the description, by the way. All the brokers linked down there. You can actually connect directly to TradingView and trade directly on tradingview.com, which might be really convenient. So check out some of those brokers. So check this out. We've got the SMH position, XLRE. Now, I can't really speak too heavily on why I've been trading. Well, I've been trading sectors for years, but why I've been, really trading them recently. But long story short, sectors are something that I trade a lot, and I've got a tool that is coming out shortly. I've been sneak previewing it a little bit here and there. If you are interested in trading sectors or stocks, the best thing I can do for you to get early information about that, there's a Telegram channel down below in the description. There's actually 2 Telegrams. There's the FX and futures one, but make sure you also join the stocks and options one, because that will be very interesting. So through stocks, although I'm not trading the direct indices, SPX, NAS, US30, etc., I am long XLRE, which is the real estate sector. This is an ETF that tracks a bunch of real estate companies. And I'm also long SMH, as we discussed earlier, which is the semiconductors, and in the last few years has been the powerhouse of the stock market's performance. So I do like these, and I think that the indices will rip real strong if we do continue to see semiconductors come back into play. So continuing to watch that. Last one is US30. US30 looks very, very strong here. The only thing I could do here is, again, let's see, do we have US30 or Dow Jones? Yes, we do, +8 on the Edge Finder. So indices staying very bullish going into this week. Let's move on from indices now and take a quick look at gold. Now, gold, oh my goodness, what a beautiful chart here. We got a very, very strong breakout here. And the gold traders out there who are long are probably loving it. And gold traders who have been fighting this move this year are probably having a really, really rough year. We see gold taking out yet again the highs that were set. We saw a bit of a pullback come in and price pushed through this. I had some comments recently, people who were, memeing on me a little bit for getting bearish over in this area, which is a valid point at this point with such a big move. But I do want to clarify, I never took any short positions on gold. And if you watch my videos, I specifically was looking for breaks and retests of this area to hold before starting to look for bearish setups. We didn't get it at all, and the market's just ripping, so there's absolutely nothing for me to do here. That being said, the Edge Finder also, I believe, still has a neutral reading on silver and gold. Yes, that's correct. -1. The reason I was getting a little bit hesitant was if we take a look, let's do this. Let's switch over our categories to metals. And by the way, guys, if you'd like to try out the Edge Finder, I should mention it. There is a link down below in the description to try it for 30 days. It's not a free trial. It is a paid trial. Or if you'd like to just go ahead and get yourself a copy for a subscriber discount, there's a promo code down there. I'm going to write it out for you. Write this down. YT YouTube VIP. So the full code is YTVIP. If you guys plug that in when you're checking out for the Edge Finder, if you don't have a copy already, it will give you a nice subscriber discount. So take advantage of that if you'd like to pick it up before the market gets open. It is a one-time fee to get access to the Edge Finder. You get access to the top setups algorithm, the commitment of traders data, all the economic data scanners, all in one tool. If you're a serious trader trying to get into the fundamental analysis, I wouldn't leave home without it. Yes, I am selling it to you. Yes, it is a sales pitch, but yes, it is a very valuable tool that many traders all over the world are loving, and that just fuels our innovation process when we hear people are loving the tool. So anyways, gold and silver, what I mentioned is, when you look at some of the numbers here, PMI numbers, retail sales, inflation, employment change, a lot of these data here are pointing towards economic strength in the United States, holding out. And that is not particularly bullish for gold and silver. That being said, one of the reasons that I do think gold and silver are just up and away is actually the elections and all of the geopolitics stuff that are going on in the world right now. Even though the economic data may not be exactly perfect, and what I mean by that is, remember, the dollar index has been on a tear to the upside, and yet so has gold. Usually these things move inversely, but not always. The reason I bring that up is because I think that one of the driving factors here to gold's strength is also the uncertainty in the world right now, which with elections just a couple weeks away, people are very uncertain if Trump were to win or if Kamala Harris were to win, what happens to the global stage? Do things change dramatically? Do things, stay the same? So with gold making a big breakout here, my opinion is, from a strictly price action view, there is no way I can justify any sort of short side on this one, right? Pullbacks, that's it. I'm not going to personally trade them long because my system is not agreeing with that at this time. I've got other things to watch with the system, but gold and silver, definitely just getting neutral readings on the Edge Finder at this time. I want to take a break here though and also take a look at the Commitment of Traders report, which of course the COT report is one of our favorite indicators on the tool, and so are, for our users. We have so many people who love this data and the way that we've built it out. So I just wanted to go through it with you guys as an example. I know I don't do it every week, but this week we'll do it. So the COT net positioning graph shows you in terms of all the contracts traded by institutional money, where they are most heavily allocated long versus short. On the long side, we have silver, gold, South African rand, US oil, platinum. These are things that when we hover over this, it will show you when we look at the number of contracts long versus short, we get the Edge Finder produces a percentage basis for you to just get an easy idea. So US oil 74%, silver 81.4%, right? And then we can go take a look at some of the most bearish ended things: CHF, Canadian dollar, 10-year treasuries, US dollar, Bitcoin. These are the things that have more heavily bearish pressure on them in terms of long relative to short positions held by institutional traders. Now, how do we know this are institutional traders? Well, we know that because the CFTC requires these hedge funds and banks to report their positioning to them, and that report gets generated and shared publicly. Now, that being said, the report that gets shared publicly is literally a horribly hard to read text file. That is, I'm not even kidding, it is a text file with just endless, what seems to be nonsense. What our software does here is it pulls all that data apart and it generates an easy to read showcase of the data that we found. I always wonder, does the CFTC and all that, do they make that report hard to read on purpose? Because it is literally so cryptic to try and pull up the stuff. So we've just taken it into that's pretty much one of the reasons that we have the business that we do. The software side is building stuff for people that people heavily request, which the COT report is top of list for our, viewers. Anyways, on a week over week basis, however, this is something that I want to point out. This data is great because it's long-term, showing you, positioning. But when we look at the latest weekly filing, this shows you in terms of like the latest week. Remember, this gets filed once a week. It shows you every week the biggest things that they added or subtracted from in terms of net positioning. So things that they bought and things that they sold. So when we take a look at the Russell, you can see that they added a bunch of long positions and they removed a bunch of shorts. I actually want to just direct your attention to these two columns as they do help to tell the story the easiest. We take a look at platinum. You can see they added a little longs, but they really decreased shorts. Nikkei, you can see that and by the way, this is actually very bullish. So if overall hedge funds reduced positioning pretty heavily on the short side, that is the same thing as being more bullish, right? Or closing out positions. Nikkei, you've got SPX. These are things that were most heavily bought for the week. The US oil, the 10-year note, silver, gold saw a little bit of buying, right? We take a look at gold. You've got 8,600 added long contracts and they added a little bit of short contracts. So a net bullish week for gold last week. So just wanted to point that out. You've also got things that they sold pretty heavily. They actually sold a good bit of NAS contracts, Dow Jones, Euro, Aussie, CHF, copper. So just wanted to point that out. The COT report is very useful. Again, you can get access to this tool down below in the description with that promo code YTVIP, and you can use this every day with your own, you can take your own time going through it, and you can go through all the different reports, retail sentiment, put call ratio, smart money indicator, all of it at your fingertips. So if you have it yourself, knock yourself out. If you don't have it yet, down below in the description, you can get that discount. Okay, let's keep going. So with gold, again, nothing to do here. I can't short that, can't buy that. Waiting for the system and price action to align. Price action's very bullish. My system's very neutral. So just going to stay on the, sidelines with that for now. If we take a quick look at silver, also silver had a massive Friday breakout. Huge move, guys. I don't know if you saw this. Silver was up like 6% to close the week on the day, which is an incredible, gain in just a single day for silver. That looks like a beautiful breakout, and part of the reason here was, of course, the Chinese stock market pop, right? Anytime the Chinese stock market pops, it's usually good for raw materials. As we know, China is a manufacturing heavy economy. So keep an eye on copper and things like that whenever, Chinese stocks pop. And what you'll notice is that usually there's some positive correlation there. Moving on to the dollar index here for a second. And the dollar index has been one that we've been watching really close in our Telegram channel. I mentioned earlier that you can join that for free down below in the description. But we've been putting out some analysis on the dollar index to watch it close. As Frank and I, who run that channel's analysis, we both, very much heavily watch the US dollar, because the US dollar guides kind of a lot of other markets. Whether you trade gold or indices, the US dollar is very important, or currencies, right? Of course, currencies. We take a look at the dollar index. I would not be surprised if we do get some sort of pullback here. It's very due for one. We've had just weeks of just upward trend here for the dollar index. If this happens, that 38.2% retracement looks very good for possible longs, and that's pretty much where I'm at with the dollar. The other scenario would be bullish if we break out and retest this area here around 104. But now let's get into some individual currency pairs that I like off of the Edge Finder's top setups page. If I go major currency pairs here, what we can see here is that we are getting currently only one that is reading bearish, which is Euro USD, bearish possible setups. So if I take a look at the Euro dollar here, we'll take a quick look at this. What I'm looking for is bearish pullback setups. So if we do get a bounce here for a few days or a week, that could be an opportunity for me to look for some short side action on the Euro US dollar. So I do like that setup quite a bit, and I'm watching it for myself, but kind of just waiting on the sidelines with this one. I've been watching for Euro dollar pullbacks for a while now, so it's just been drifting lower without me, which has been a little bit painful, but it happens. Taking a quick look at Bitcoin too. Bitcoin, I believe, is actually a top setup currently on the Edge Finder as well. Yes, it is. Bullish number +7. So bullish readings for Bitcoin. I'm really interested in this recent breakout that we've seen. I am looking for a pullback on this one. If I can get it, I will probably take a momentum trade to the upside. I do currently already have a position on Bitcoin, but it's actually an options trade that I'm in. So if I'll show you this, BITO, which is a Bitcoin ETF, which is an exchange traded fund. If you don't know what an ETF is, you can trade CFDs on Forex brokers. You can trade futures contracts, on futures brokers, and on stock brokerages, which is primarily what I trade on. I can trade ETFs if I want to trade things like Bitcoin or gold or things like that. I can still trade them through that. And the beautiful thing is I can also trade options. So I actually sold puts. That position's looking really good. When you sell puts, you basically want the market to go up, and I have been making some good money on that process. That being said, if we get a pullback here into support, I'm very interested in looking for continuation plays on Bitcoin, as I do think that you're entering into a potentially strong risk-on cycle where stocks just continue to rip, and we see things that are higher risk, like Bitcoin and real estate, continue to do well. I'm already positioned, as I mentioned earlier, into real estate. And if you want to learn to trade these sectors, they are some of my favorite things to trade. I know we all talk about, gold and the euro, but if you want to add more diversity to the things that you watch, sectors have been a beautiful thing for me, because certain sectors trade very differently. They react very differently to inflation numbers and PMI data. It's really interesting how granular this stuff can get. I do have some cool stuff coming on that. Like I mentioned, a tool that we are working on is coming public soon, and we will have probably some more information on that this week. The best way to get early information about the new tool, it's not the Edge Finder. We've got a new tool coming for stocks and options. If you would like some early information about that, the best way to keep in contact with us on that, down below in the description, find that Telegram channel for stocks. Last thing I'll say here, guys, is if you are looking for a better brokerage, like you'd like to trade with Webull or one of the other ones if you're outside of the US, all of them can trade directly on tradingview.com, which is super convenient. You can place trades, manage positions, all that directly here. Make sure, take advantage of the links down below in the description. They are referral links, and if you choose to use them, you'll be supporting my channel, and I really appreciate it. It does help just to, we have editors and the software development stuff. There's an overhead to what we do here. Of course, these videos will always be free, and you don't have to do anything, but if you hit the like button and subscribe, that would be greatly appreciated as well. Have a great week ahead, guys. Trade safe, and we will see you next time.